What's going on, everybody? It's Jeff here. Welcome back to the channel. AMC down a little bit today. We are still above where we closed last Friday. In this video, I want to talk about the market recovering after Monday's sell-off, where it currently stands. I'm also going to go over this new low-priced ETF that AMC has at almost 7% stake in, what it kind of means for us, and what the potential could be for hedge funds in the future. And then lastly, guys, I'm going to talk about where the institutional investments stand currently that we know of, okay? So let's get right into it. First and foremost, guys, let's take a look at where SPY is. A hard recovery bouncing off that 100 moving average as we're approaching those all-time highs after a rocky Friday and a hard Monday sell-off. As you can see, guys, this cycle really tends to repeat itself. Expect it to make all-time highs, get a little frothy again, and another pullback. Remember, guys, when the VIX begins to get low around that $16 level, check out those options. Guys in the community are absolutely crushing it with that play. If you're interested in joining, guys, come check it out. Okay, now let's get into this too. I want to talk about this guy right here. Jim Cramer predicts the S&P is done getting slammed, sees upside ahead. Who knows how long that upside is going to last, but if all you guys know what happens when this man tends to speak, the opposite is highly likely. Just keep that in the back of your mind. I thought it was funny. I wanted to throw it in there. Now let's talk about this ETF, LOPX. Okay, it is a direction low price stock ETF. It invests in 50 companies that are trading between $2 and $5. Okay, they will remain in there until the prices decline below $1.25 or increase beyond $10 at the quarterly rebalance. It looked like it was rebalanced in June 30th. It's concentrated of energy and healthcare sectors, and AMC is their number one holding by almost a 2-to-1 ratio from their second spot. So it's a lot of, skepticism out of everything I just said to you guys. You really should be questioning yourself, why is AMC in this fund? Okay, so I'm going to keep a close eye on this just to see if they're potentially going to utilize this as another avenue to be able to short AMC, just like they were doing with IWM. If you look at where it stands today, the volume is, pretty much nothing, guys. We're under 30,000 per volume, but it's just something just to keep an eye on. And like I said, the more that we can get ahead, okay, of some of these potential tactics, potential moves, all right, the better prepared we will be, okay? Now, I was continuing to look at these 13Fs for AMC, all right, and they still got, I believe it's till August 15th or 16th to be able to go from that 45-day grace period after Q2 close. But you see from here, from what we still know, because this is the best information that we're going to have, it is delayed, but it's the closest information we're going to have, is there's still a lot of buying going on. You see prices here, $52, $33, or even a huge block, 2 million shares at $17, another one, $17, 345,000, 580,000. So there's still a lot of buying, and I'm not seeing a lot of red here. I also will jump over to Market Beat, guys. And this kind of says it even closer. So a long time ago, well, even a long time ago, it's probably only a couple months, but it feels like a long time ago, I was telling you guys to follow the money. This is back when it was sitting at 10 to 12 bucks. Guys, follow the money, follow the money, follow the money. Trust me, these big banks, they're always going to, not, I don't want to say always, but a lot of times, guys, they're 10 steps ahead of us. They know information that is not always privy to us. They make smart decisions. That's why they're banks. That's why when I've talked about a potential downturn, okay, watch what the banks do, like hinting at Wells Fargo pulling their personal lines of credit. These banks are going to prevent themselves from getting crushed like they did, okay, when the mortgage crisis in 2008, 2009. But I was talking about a long time ago was follow the money. It still literally shows that these institutions are not selling, okay? Q1 is completely closed out. All of that information has been publicized. 15 million to 230K. Q2 is on its way to being completely publicized still. 339 million to 12 million. I expect this number to change. I definitely do. But I don't see it going up to being nearly as high as that 339 million. And then even when you look at Q3, which is very little bit, there's only a hair more sold than bought. And considering how far AMC has run, I would expect it to be a little bit more. So I see a lot of these institutions potentially still hanging on to some of their positions. Okay, now these are, institutions are dealing with, other people's money, so they have to protect their gains, they have to protect their own livelihood. So them selling some of their position after 100% runner is completely understandable, and the risk that they are allowed to take is much less than a retail investor. Okay, but paying a close eye to this really should tell you guys to continue to, follow the money and just to see exactly what's happening, that it's manipulation, that continued shorting. Okay. So lastly, guys, I want to take a quick peek at the charts. We're going to take a look at just where AMC still continues to stand. When you're looking at the 4-hour chart, can you guys see this? Now, let me zoom in. Hang on. When you're looking at the 4-hour chart, let me go back. I'll zoom in for you guys. When you're looking at the 4-hour chart, you can see the MACD is still on a bullish upside. RSI has retraced back from about that $47 to the $41 level. We bounced off the 50 moving average. It's currently sitting at 43.26. That is going to be our next strong sign of resistance. Okay, so expect us to kind of bounce through here. Now, Fridays naturally haven't always been a great day for AMC. If you've been rocking with us for a long period of time, Fridays are not really the best days for AMC. One thing I want to point out to you guys, and I've been covering the options chain for a long period of time, okay, and I play options pretty heavily in my portfolio. I wouldn't say AMC options, but just options in general in my portfolio. And one thing I like to pay a really close attention to is just what's happening on the options chain. And it's a really good indicator for what is happening with the stock price. It really speaks really well to me. Okay. And one thing I have continuously seen is a lot of individuals seeing that price run on Monday, Tuesday, and they go ahead and they buy just out of the money call option for expiring that Friday, when they're not really understanding how theta and time decay will absolutely murder your option value when you have such little time on your side. And the amount of open interest just continues to increase. And it's, some of these numbers are, some of these open interest is actually a lot. And I can see volume increasing. Sure, you've got guys, going back and forth, like AMC, dips hard, you buy a call option, sell it on the rip. Like, I understand that when you're talking about like some of these professional options traders, that's why the volume will see increase. But the open interest just says to me that these are some, retail investors, okay, because that are still hanging on to some of these options. So just be careful when you start to see something run up on a Monday or Tuesday and you think, oh, it ran from 40 to 44. I'm going to buy the $50 call option. Well, it's already ran up. Implied volatility has increased a little bit. You're paying a high premium, okay? Because when you're buying a call, when the price is already running up, you're buying a high premium. All right, so just keep that in mind. Understand how these weeks tend to run. Naturally, Mondays and Tuesdays, maybe Wednesdays, but really Mondays and Tuesdays are positive days for AMC that tend to run. Thursdays are much cooler, and Fridays are definitely a pullback. It's just that's just how it's been, historically for the past 8 to 10 weeks. So just keep that in mind if you are buying options. I know there are people out there like, oh, you do nothing but hold and buy and hold the stock. And yeah, that's okay. I completely understand it. And I agree with you. I hold AMC stock too. And that's, exactly what I do. But just by looking at this open interest here and seeing how much expires, okay, especially just out of the money, says to me that is retail, buying these stocks. And if you're not completely educated in understanding on how these options work, okay, then you're going to end up losing money, and inevitably that's exactly what the hedge funds want, because the less money you have, the less chance, or the less stocks you're going to be able to buy of AMC. So if you are interested in learning about options, even whether it's to invest in options or at all, if you're sitting on AMC, guys, click the first link below. Everybody who is a part of our private community has access to like 4 hours of training material. It's all about from stock training, options training. Okay, it was something I really put my heart and soul into. So if you're interested, guys, I guarantee it's the best couple bucks you'll spend. So that's it for this video, guys. I'll see you in the next one.